Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted to have in the studio Simon Gallagher from Euronext. Simon, how are you?
Very well, thank you. Thank you for having me, Toby.
Oh, listen, great to have you in here. It was supposed to be live at the Fix event. We couldn't quite get the diaries to sync up, but it's even better to have you here in the studio. So lovely to see you. You're on a panel at the Fix event. We're going to dive into that, talk a little bit about market structure. We're also going to talk about the story behind Euronext a little bit, what you've been doing, where it's going, some of the things that you guys are working on at the moment. So I'm looking forward to the episode.
Thank you.
Thanks for coming in and talking about it. Simon, let's kick off as we always do by some introductions. Tell us a little bit about yourself, the bio, and then a little bit for people who don't know about the Euronext story.
Yeah.
I doubt there'll be many of those, but tell us the story anyway.
So I'm a bit of a baby of Euronext. So I joined many years ago around the corner here in Cannon Street at our little broom cupboard office, which I think had 3 people in at the time.
Is that right?
And I joined as an account manager back in the days when we just did that first merger of Euronext between Paris, Brussels and Amsterdam. And I'd never thought I'd still be in the same firm 25 years later.
There's not too many carriage clock stories these days.
No, yeah, exactly. But I've had the immense privilege of literally growing my career with the trajectory of the firm.
I love that.
I moved to Paris pretty quickly after 3 years in London. So I did 20 years in Paris, and I moved back to London 2 years ago to head up our UK operations here as the local
So back
CEO.
home.
Yeah, it was a strange experience going back home as a half Frenchified expat, but yeah, it's been great fun being back.
Yeah, absolutely. And now you're, tell us a bit about how that role's evolved. So started as an account manager.
Yeah, Euronext, as I said, was on this massive growth trajectory, and I somehow managed to move around every 2 or 3 years, putting my hand up, say, can I do this?
Yeah.
So I did 2 or 3 years of account manager, and then moved very quickly around sort of finance, internal process integrations, strategy, M&A, and I was chief of staff to my old boss. And then we IPO'd. The crucial moment was in 2014 when we had to IPO for the second time, when ICE spun us off as an independent unit. And then we had to recreate Euronext from scratch because all the support functions were back in New York. A lot of the heads of business units were in New York because we were part of the New York Stock Exchange at that time. And that was a very tough but very exciting time where if you were prepared to put your hand up and get on with things and roll your sleeves up, you could create opportunities. And so I was put in charge of the cash equities business back at that time. Mm-hmm. It was just me and 2 other people. Yeah. So we had to slowly build that up and all that. And then I sort of slowly accumulated a number of sort of trading groups of the ETFs, the derivatives, warrant certificates. At the end, I was also looking after the new data center commercials. So I did that for 10 years, and then I was like, right, I've had enough, time for a change. And so I took a geographical role, got appointed to the managing board of Euronext, and was really proud to come back to the UK and see how vibrant the city still is. Yeah. And secondly, how much our operations here have grown from Euronext. There was a bit of chatter back in the day post-Brexit as primarily a provider of continental exchange infrastructure. We might be scaling down our operations. But here in the UK, we've never been bigger and stronger serving our client base in the UK. At Brexit, we were 40 people. When I turned up 2 years ago here, we were 80 people. Yeah. And now we're 180 people here in the UK. So we had to move out to Canary Wharf, which has also grown a lot. So it's been an amazing...
It's a very different world, Canary Wharf, these days, isn't it? Must have been interesting for you to come back to
Exactly.
it.
Last time I was there, it was like going to see customers in a wasteland of sort of docklands. And by any standards of international sort of urban development, the UK and London has created a second capital city in the East. And there's a third one building in Stratford. So the infrastructure investments,
really interesting way of looking
from an outside point of view, coming in and seeing your own sort of country, we tend to knock ourselves a lot in the UK, especially post-Brexit, a lot of soul searching. But when you come in and see your own country with fresh eyes for the first time, and you see the amount of development in Canary Wharf and now in Stratford, London is just buzzing, and there's so much energy here. Yeah.
Do you know what? I'm so pleased you said this because I'm very passionate about London as a financial centre. And we've written and produced magazines before. This is 10, 15 years ago. We produced a magazine called the FinTech Capital. Yep. And it was, where is the positioning of London and that sort of play? And I think it's really interesting what you mentioned there about Brexit. Yeah. Because there was, as you were highlighting it there must have been a lot of talk about the downscaling and the repatriation of the business abroad, etc. Yeah. But we've seen the complete opposite for you guys. So yes. There's a quadrupling post Brexit as opposed to a scaling back. There's excitement, there's energy, there's vibrancy around all of that sort of stuff. Tell me the thought process about why that's happened and why, against prediction, it's actually gone completely the other way for Euronext.
There's two reasons. So first, mainly to do with the traditional trading businesses. So after Brexit, we saw a bit of repatriation of trading roles and then some back office compliance roles to various sort of capital cities around Europe.
Luxembourg was getting busy, wasn't it, at that stage?
And Paris probably came out the winner of that. Yeah. It stabilised pretty quickly. And what we saw was that the real decision makers for a lot of what we do still remains based here in London. So that was a bit of a move, but now it's kind of stabilised. And for maybe old timers such as me, remembering the prospectus directive back in 2000s, when London didn't have this sort of central role it has. So it was just a tiny rollback, I think, of that central role London had in intermediating flows for the continent for legal reasons. So it was a lot of repapering, as we know, was done. But clients remain here, and London remains essential for that. And the second reason why London is so essential now is that we've also gone outside the exchange, trading, clearing and settlement businesses, a big diversification play as well, as a lot of markets have done this. The LSE have done it, Deutsche Börse have done it. And so we've acquired a lot of SaaS businesses, which people don't really know about. So we provide a lot of corporate services. We provide sort of commission management sort of software between buy side and sell side. Yeah. And this kind of stuff is in the background. So if you come into our office, you'll see people in suits and ties like me down one end, and you see all the FinTech RegTech guys down the other in their jeans and t-shirts. So those are sort of the two stories.
You've got them in an office, full stop.
Don't tell me about that. So it's an interesting office. We don't run a big market here, which means the office is totally product and sales focused. Everyone is on the sort of out pounding the streets of London all the time, or Canary Wharf. So there's a really nice sort of energy in the office, I think. And
I think it's really, when you mentioned there about the investments and the SaaS companies you've gone into, I've known a fair few of those over my time, and spoken to about it. And I think what they're actually seeing is they're flourishing around it as well. I've seen some of the numbers of what some of those companies have done. Phenomenal, success stories in a fair few of them. And actually, I think what they talk about to me is a company that gets it and allows them to be themselves and sort of plays into the best part of it. And you don't often see that. There can be some horror stories about that sort of thing. But it feels like you guys are getting that right now.
It's a really, really important point. So when we acquire these firms, they say they're in t-shirts and jeans, the founders have to be kept on in some sort of role, because they are so passionate about what they've done. They built that business up from their garages and home offices, and integrating them, but giving these teams the correct level of flexibility, not breathing down their neck in terms of sort of reporting and so on, but making them part of the growth story. So we're not asking for cost synergies mostly from these. We're just asking for growth and revenue synergies, which is a positive story, and it's exciting for the people that join us. And when you get several of these firms acquired, then you start getting even more synergies between them. So we've had Concise in the group for a while. Just acquired Substantive Research, which is a sort of market data cost benchmarking tool. And you've got all sorts of Accupay and so on. So they're all starting to work together now to create greater synergies in terms of product development.
Which is fantastic, isn't it? And I think that's my view on this, which sounds crazy, doesn't it? But you hear people talking about acquisitions and what it means and why they're doing those sort of those sort of plays. And there's no connectivity. It's like we need to acquire, we need to buy, bring a company into it. We want to do this as part of our strategy, and they don't think about the connectivity of the businesses within that they're working with, and they then think, right, okay, we can run it better, and they imprint their force on it, etc., etc. Founders leave, and there's this sort of gradual disintegration of it. Yeah. But again, it's like I'm super encouraged about the stuff that I hear from how that all works out, and I think the feedback has been absolutely brilliant in everyone I've spoken to.
Yeah. It's sort of realising who you are. We're still a financial market infrastructure with a strong exchange culture. Yeah. You can't apply those sort of management methodologies, those reporting, the audit, compliance frameworks to a bunch of startups because you'll just kill it and suffocate it.
Yeah, because it is two different games, isn't it, effectively? And you can work out where it comes in, and there's benefits to both parties from it. But too often it is, right, this is how we do it, so this is how you need to do it.
Yeah, if we didn't do that, we'd have killed it.
Yeah, absolutely. You mentioned there the market structure and slightly, and what the day job. This is what you were talking about at Fix, so I want to come back to that quickly. We were due to sit there and talk about the panel, take away some of the highlights, and what I was asking people on the day there was, what are some of the things you wanted people to walk away from that conversation thinking about? And I think that would be a good thing to dive into. And I know that was talking about what's keeping people awake in market structure at the moment. Tell us a little bit about what was discussed on the panel.
So I think the starting point for all of these panels at the moment is the market integration package, which was published by the European Commission just before Christmas. And there was a lot of important stuff in that. And the number one thing I think was in that for us was a realization that Europe needs to compete as a continent and as a trading bloc against other international financial centers, New York and America and Asia. And we had a load of sponsored reports from the European Commission, the Draghi report, the Letter report, highlighting the need for more efficient European markets. If you were a sort of a Martian coming down to Earth and you compared US market infrastructure to European market infrastructure, you would see a spaghetti mess of connectivity between still a lot of national exchanges. So that has consolidated a lot. So half of equities trading goes through two markets today, which is competition and consolidation has sorted some of that out. But then you scratch the surface just slightly, and you still see more or less speaking, each country still has its clearinghouse that they've had for the last 20, 30 years. And even more sort of concerning is that you have more CSDs in Europe than we have countries. We have 33 CSDs. And the complexity of that infrastructure, policymakers have realized, is holding back European growth, is adding frictional costs into the system. So the MiFID did the first layer of bringing competition and choice and consolidation to the trading, which it has done to some extent. But then all the post-trade stuff, which we on the trading level don't often talk about on panels, is now coming to the fore. And so I think that realization from the Commission that more competition and consolidation needs to be brought to the post-trade player was good. And this is maybe a particular thing for Euronext, but we run 8 markets in Europe. We have the wonderful privilege of having 8 regulators sitting around the table. Our friends at SIBO have 2, one in Amsterdam and one in the UK. And for market players such as us who are making the effort to integrate to buy markets, it is getting a bit complicated. So we really lobbied, can we have one single supervisor, please, as a significant pan-European player? And that was fair and square, put on the table. It's a very politically sensitive thing to roll out in Europe because there's still a bit of, each national regulator wants their local stock exchange, their local airline, and all that kind of stuff. But we're pretty optimistic about getting that over the line. So that was the first thing. So European competition and single supervision for players such as ourselves.
And that's pretty big news as well, right?
Yes. Politically, this is very big news for certain competent authorities to give up the oversight over their traditional national exchange. This means these concepts will hopefully disappear and we'll start having more pan-European entities.
And they're open to it for what reason? Because you know the traditional side of that, and I can get that. But it feels very progressive for that to be optimistic about that. There's
a realization, I think, among a number of national governments and regulators that something needs to change in Europe.
Yeah.
We need more European champions in the market, financial market infrastructure space. And to make that happen, you need to give a bit of national sovereignty up to have more sort of greater European success.
Yeah.
We've seen a bit of a shift amongst several national regulators in that respect. Yeah.
And you mentioned there's a second part of the panel as well.
Yes, so that was all about the sort of it's more exciting stuff. It's about the nitty-gritty of what's happening to liquidity, what market structure is looking like today, and what's keeping people awake at night, whether in good or bad. So there's a real consensus now that there's been a fundamental shift in where liquidity is going in Europe. And we have seen a rise of bilateral trading at the expense of multilateral venues, be it ourselves or the markets or competitors with us. And this is the growth of systematic internalizers, be they at the electronic liquidity provider level or at the the big investment bank level. There are two very different animals, by the way, in terms of the economics, and so they are competing against each other. And so we're a bit disappointed with the Commission's proposals, where they didn't do much to look at this. The FCA has started to look at it, but at the Commission level, they ignored it. It is a very difficult question, because you can say, oh, okay, at what percentage point does a move from lit price forming liquidity in a multilateral pool actually deteriorate the quality of that price formation? And then you have all these other platforms importing those prices, trading in the dark or in non-transparent ways. Does that central liquidity formed price become deteriorated or no longer representative of what the market sees as the price of the asset? There is no empirical evidence for this, but there is a clear logic and directional view that things are going to a point where potentially this could be the case. I think there are two aspects to this question. One is the overall volume, so you can say X% in lit, X% in off venues, blah, blah. But then it's like, okay, but even if it's within that question, there's another question, which is, okay, what is the nature of the liquidity which is left on the platforms? Is it representative of the market? We're nowhere near this point today, but in some asset classes, ETFs, for example, what is on exchanges is primarily sort of ELP flow versus retail flow. With lit, that's changing, by the way, but it's going the other way a little bit, where sort of institutional flow from the big sell side coming in. And so these are vague questions. They're very difficult to answer questions. But we're just concerned about the direction of travel, and we think the regulators should look at this and very carefully see how off-market venues are regulated and.
I think it's so important to have the regulators pointing in the right direction. We spoke then about London, and the opportunity that London has as a financial capital, and exactly the same in the States. And what we see out there, there's a huge impact that we can do. And I think if my take on this, and I'd be interested to hear your thoughts, but my take on London's been pretty friendly to businesses in this space for a while, which has allowed us to gain momentum. If we can keep on really working hard on that, there's just so much opportunity.
Yeah, completely agree. And you really feel an energy came back in London probably two years ago. Just after I arrived. Suddenly you saw people out in the streets again, like the other day.
No coincidence.
Talking about pubs, but you couldn't even move outside St Paul's. All the roads coming out with people out, and that sort of out of the office energy is really crucial to London's.
I agree with that.
You bump into people. We're talking about a mutual friend you met last night, and that connectivity in the city. We have a concentration of expertise, lawyers, financiers, market infrastructures. You can just bump into people and have coffees. It's a very old-fashioned way of doing business. But the little snickle ways and medieval alleys of London are really, really, really favour that. And where I think the UK is doing well is. There's two aspects to it, I think. One is sort of traditional market structure stuff, where we have not seen a Singapore-on-Thames emerge in London with MiFID being ripped up. There's a consensus between the two sort of groups of regulators and the UK regulators. Like, in our societies, we don't want a massive deregulation of market infrastructure. So if you look at the sort of the day-to-day business of what financial market infrastructures, equities, derivatives do, there hasn't been much of a change. There's sort of this dynamic alignment agreement where they sort of meet, and all that's settled down now. But that was a bit of a pointless exercise. It just added costs to our clients, to exchanges, had to duplicate legal structures and repaper everything. But where you see the UK moving quite quickly now, it's in sort of the new sort of crypto, decentralized technologies, where the FCA and the Bank of England have really got their act together in terms of sandboxes. And they can move very, very quickly. We'll see what comes out of the agreement we have with the US in this area. But I think, this is where we'll start to see some.
It's waved at various different stages, isn't it? And I genuinely believe this is a huge opportunity for us as a country. And you go back to when Rishi was there, and I think he stood at FinTech Week and was talking about making us the capital for digital assets. And I think at the same time, Anderson and Horowitz were over here and sort of pushing a big agenda. Then Trump coming in, sort of switched the momentum back to the US. But I think there's still an opportunity for us over here to, through regulation in particular, to make it really
especially it's a middle ground where the rule of law applies obviously in the UK, and that all those legal institutions which make the UK such a sound place to do business.
And as it's collided more TradFi, to become more TradFi.
Yes.
With the strength that we have in that, and that being the ticket to move it further forward, I think that's a really interesting.
I think we're in an exciting place now. Yeah,
definitely. Yeah. Let's return back to the script and Euronext in particular. No, not at all. You're on point with it. But I want to come back to Euronext, and there's obviously been some interesting stuff. You spoke a little bit about the acquisition side of things on the software side that you've done before, the SaaS side of things. You've also been acquisitive with Athens recently. So tell us a little bit about the state of the M&A world and the motivations behind Athens, and then actually where you guys are focusing a little bit at the moment as well.
So sort of the traditional sort of playbook of Euronext, how we create value for clients and shareholders, has been in the past, I'm talking about 3 or 4 years ago, to acquire other stock exchanges. And it's a very simple playbook for us. You take out the data center, you put it in the same clearinghouse, one single line of code, one market data feed, and so on. And that is a very sort of attractive business proposition for us and our clients. If you look at the market in Europe at the moment, things are kind of that all get sort of M&A story. There's not a huge amount going on. The different exchange groups are kind of sort of stationary where they are. And we were delighted when the Athens exchange accepted our offer, and there's been huge growth in the market over the last year since the offer went in. And it's just a case study of the value we can bring to a market. So we'll migrate that market next year in terms of trading, and the year after in terms of post-trade. But that gives something magical happens when you integrate a smaller market like that. Mm-hmm. Those local Greek players, they will be able to seamlessly, through the same connectivity, same rulebook, access 7 other markets, 25% of European trading through their local exchange. Their exchange will now be, in physical terms, be located in northern Italy at the data center, which is our central data center. But that will make access to pan-European markets for them massively cheaper. They won't have to pay all these ISVs for the connectivity to a Paris, to an Amsterdam, to a Portugal. That's one way. But also, we know some of these sort of smaller markets have been a bit of a pain for the big intermediaries here in the UK to access. So they go through either local firms or one of their peers to access these markets, and they incur extra costs along the way because they're going through more steps in the chain. And so that will be a significant cost savings for those clients, which empirically, every time we've done this in the past, you see a huge uplift in the volumes on that platform. So we're very excited about that and the prospect for really integrating Greece into the European sort of economic model for us. It's
phenomenal, isn't it, to think that and see the benefits. And again, it comes back to what we were talking about before about the thought of where that acquisition goes, which again, I sort of saying it sounds so obvious, doesn't it?
Yes.
But common sense and common practice are very rarely the same sort of play.
And they're a great shipping location, so we're looking how we can sort of expand that shipping franchise from the IPO perspective. So we'll have Norway, which is a great oil and shipping centre. Now those two centres are speaking very actively together. We'll also locate just internally a tech centre of excellence there, because there's great talent on the ground to support the IT teams of Euronext. Yeah. So we're very excited about it.
Yeah, that's a really interesting part actually. The access to talent is often underspoken about in those sort of things, isn't it?
And the Greek market has developed market status now. So there's a great talent pool in Greece. The economy has been completely turned around. So they're ripe to take advantage of the Euronext opportunity.
Absolutely. And then speaking of that, the other side of it means continued growth. Against expectations of moving backwards, it's quadrupled since Brexit. It feels like growth is on the agenda. There's obviously the acquisition side of it, but there's also the internal growth and looking at products and areas and all that sort of thing. So tell us about what that looks like for you.
So just before that was a fundamental thing changed for us when we acquired the Borsa Italiana group. It fixed 2 big problems. So first of all, it gave us a clearinghouse within the Euronext group for the first time in a very, very long time. And it gave us a very large CSD in the group for a very large time. So the 2 big chunks that were missing for us in the value chain came in a domestic Italian form. So that domestic Italian clearinghouse has now been Europeanized away from CT&G into Euronext clearing, and they clear all of Euronext European markets, which is a great growth story for Italy. But what these two bits in the value chain mean is that we can grow upstairs in the sort of trading part of the value chain, becoming more pan-European on the cash equity side, which is our traditional bread and butter. But also, once you have the clearinghouse, you can start getting a lot more innovative on the derivative side. And so derivatives trading platforms always mostly come with a very efficient clearinghouse behind.
Yeah, of course.
And so for the first time, we're rolling out a lot of derivatives products. So we now offer power derivatives through a recent acquisition from NASDAQ, fixed income derivatives in retail size, and then we're moving to institutional sizes in those. And we're offering repo services, clearing services that are being rolled out this year. So this has been the big sort of organic growth area for us, building on those sort of two acquisitions. And then a bit further back from that, on the CSD side, this is what I was talking about earlier. It's a big neglected part of policy making and maybe market infrastructures generally. We have 4 CSDs in the group today, so we're converging those into one set of more aligned CSDs to make that a bit the Euronext of CSDs. What we did on the trading level 20, 25 years ago, we're bringing that to our own in-house CSDs. But we're also bringing a bit of competition to this space. And so before the end of the year, our in-house CSD will settle trades on Paris, Brussels and Amsterdam in competition with the incumbent, which is Euroclear. And so hopefully here, between ourselves and Euroclear, we're going to bring cost savings to the market and consolidation through competition. This is the very first time competition has been brought to this CSD space in Europe.
It's amazing,
so
isn't it?
Taking advantage of the legislation in place, Target 2 securities, and hopefully sort of disrupting things a bit in this, what was traditionally considered a bit of a back office space.
Isn't it great though to see something as established as Euronext looking at that sort of thing about looking at things in disruption and innovation and going into different areas. I think so often we sort of sit there and things stay the same in markets, and companies say, look, this is what we're good, let's stay in our lane. I love the fact that it's always been so creative in what you're doing about where we're seeing things, the opportunities to think about where that expansion comes from, and it manifests itself in the results, right?
Yeah, absolutely. Yeah. We're very excited. Yeah.
Well, it's been a wonderful story. I loved hearing it actually, direct from you as well. It's been, I think you always have sort of conceptions about where it goes, but it's absolutely phenomenal what you guys are doing out there, and long may it continue. If people want to get in touch and find out a little bit more about the business,
reach out to me personally. I'm on LinkedIn or
all good channels.
Yeah, all good channels, and we have we've really built out the team in London in terms of sales as well. So just reach out to your account managers to me personally, and we're more than happy to have a chat.
Fantastic. Listen, great to see you. Thanks so much for coming in.
Thanks for your time.
And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.